All right, let me begin by saying hello, everyone. Zuck here with the LincolnList.com, and today I would like to welcome you to another weekly edition of Stock Market Mutterings, and you guys know why I'm here, right? I'm here for the same reason I'm here every week, and that's to take a grope in the murkiness, trying to make some sense out of the market here, and try to provide you guys with some quality trade setups. As always, if you need help with your trading, somewhere on this screen will appear a link. Every day that the market is open, I'm here, right here, in this chair, in front of this screen, streaming from this office. So if you need help, click on that link. Feel free to trade with me. So I'm going to start out here with the SPY as always and say that we got a mix of everything this week, did we not? We started out with like stupid bullishness on Monday, like ignorant bullishness, followed by chop through the next couple of days. Then a disappointing employment job number, I should say. And then we got a sell-off, and we kind of ended up just right where we started, right? Kind of up and down. It was a little mix of everything. So we're going to go back and review this here. Monday was one of those days. It was like when I said ignorant, uber, stupid, bullish. Like I've seen some bullish markets, but this was a really bullish tape on Monday. And I say that because I think you could have bought a futures contract first thing in the morning with like a 2-point stop and trailed that up, and you would have never got stopped. I mean, this thing just did not, like number-wise, we've seen the market move higher than that before, obviously. But this thing had like zero pullback. Like nobody sold shit the whole day, right? It was just buy, 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 buy. That was it. You didn't even get a pullback. Now, that's obviously exaggeration. I'm sure it pulled back more than 2 points. I'm just making a reference like, geez, you want to talk about no pullbacks. This market didn't have any. So normally when you get such strength all throughout the day, the market needs a couple of days to digest. So following up Tuesday, Wednesday, thinking, okay, we got some chop back and forth. That's normal. Market needs to digest this move. Then, of course, when the jobs number come out, it was a little bit of a disappointment. We saw the market get pretty aggressive to the downside, especially on Thursday. It really started to take the air out of some of these tech names that were responsible for this rally in the first place. Things like Apple and a couple of those other stocks. I mean, like Apple was down 19 bucks one day. That's pretty big for that. I mean, it's been a long time since we've seen that type of activity. Now, where we end up is very interesting here, and I think Monday morning's trading activity is going to be pretty important. I'll kind of open up this daily chart down here a little bit for you guys. So, we kind of end up right here where we started, thereabouts, in the same area. And this just happens to be really big time short level support. Like you got some support right here from the 16th here. Now you got this little double bottom resting slightly under the 10 moving average here on the daily. So I think this 319 right here in this spot is going to be pretty important going forward, especially early on Monday. If it's able to defend this and it holds that level, you're probably going to see the next move try to reclaim where we were on Thursday and where we were on Wednesday up here towards these 327 spots. It's going to try to make its way back up there. And this could quite possibly turn into yet again the 100 millionth buying opportunity on the market pullback. Now, if it doesn't hold, why I say we should really pay attention to this is because there isn't any real support in this chart until you start moving down here towards the 312s. Now, you could say that the 20 moving average might act as support, and sometimes just because it breaks a support level, it doesn't necessarily have to trade to the next support level. There's times that it doesn't, but that's quite a ways down here. You got to remember, this has been a really strong rally, and the moves this market has made have been large. So once it starts to break support, the possibilities of it trading down to the next viable support levels, these are far away in a lot of cases. So there's a possibility that gets done. So if you start to see weak action early, what I'm saying is pay attention to 312. That might actually come into play before you get a significant bounce. And that's not even that big of a correction inside of this shorter term bull market since we had March lows. I mean, that's still not that much. It's just a wide ranging market right now. If it does hold up early, I would expect that we at least try to move towards that 325s, 327s before we see any selling. And you kind of have the same look there in the Qs. Now, this has definitely been the leader in the market, but you're experiencing the same thing. I don't even think this is quite 5% yet. Don't quote me. I'm just trying to add in my head here. I think it's pretty close to almost being 5%, right? But, that's still not that much of a correction. The same thing, it got right down into some viable areas of support here. And this next one is all the way down here in the 238. So this could get ugly. So I'm not saying that's going to happen, but we should prepare for that. We should be paying attention to this level because it is of some importance, especially if you start to see panic and shaking out early Monday. There might need to be a little bit of, rinse out cycle here and clean some more people out and move to some lower numbers before you get a solid interest in bullish activity again. It remains to be seen. So anyway, that's my take there on the market instruments. I think there's a possibility we could go lower. Don't expect like some long-term drawn-out repeat of March crash. I've been saying that religiously now for quite some time. But, a simple 5% correction, a 10% correction is something that could easily happen in a market like this. And because we've moved so much, that's far away from these highs. Like a week ago, the NASDAQ was making highs, it seemed like every 10 minutes. So just a simple pullback could be 10, 20 bucks off of some of these, maybe even more on some of these stocks. So just keep your eyes on that. Now, this could turn out to be, like I said, an opportunity to pick back up some of these strong names that have performed well, that really never gave traders, investors another opportunity to buy back in. It's just been more like, for the last couple of weeks, a chase out where you're just, the value with each one of these rallies, you're getting robbed for alpha. And this might be an opportunity. We're going to have to see how the market opens up, but this could just be another buying opportunity. And if that is the case, I kind of like these. I want to look at these stocks that have been really strong that might offer us a second entry. And then one of these would definitely be to a low. I mean, this thing is on a monster run here ever since they had earnings, printing back here on the 7th. When you were in the 152s and, well, whatever you are right here. I mean, this thing's just been almost straight up. Like with a lot of stocks. This has made quite a big move here. I think if you're sitting down here on the 20 moving average right here on the daily chart, just roughly right on that, you got some better support right down in this spot. This is where I think would be a great spot to enter this, especially if you begin. Now, something else I'd like to mention here, coming from mainly what I'm talking about here is day trades primarily. Some of these could set up for swing trades as well, and this might be one of them. But when you have day trades and stuff like that, you have moments where you're just looking for the next 10 minutes. Is the next 10 minutes going to be strong or weak? Is the next 20 minutes going to be strong or weak? For some traders, it's even less than that, seconds. But when I look at something like this, even if you go through a correction, if you guys have never been through one or you don't quite understand them, most of the time they don't go straight down during a correction either. They kick and scream the whole way. So there's going to always be bounces in these stocks on the way down, even though if they turn bearish. So I think if you start a day out, and why I'm saying this is if you begin the day with aggressive panic selling that breaks through these big time support levels, by the time the day is over, most likely you will end up lower. But at some point right there, once they break that, there's always this initial knee-jerk reaction to buy that dip once it breaks through the support. And you usually get these quick snapbacks. Sometimes they don't last but a couple of minutes, but there's trades to be made inside of there if you're quick. I say that because I think if you just start out the day by testing the lows here in the 235.70s or the 234s, you're probably going to see this thing bounce a little bit first before it recycles. Now, I say that as well because that opens the door for multiple trades, because if you're on it and you catch it there, you can play the bounce. If you miss the bounce, you can think about reshorting something like this depending on the level of the bounce to get to resistance and so on. But kind of pay attention to that. Now, especially if it moves down into this range, I'd be interested in probably buying it, maybe even swinging it. But that would also have to do with how the market is behaving at the time. If this is the beginning of a more deep, profound, high selling correction, then no, I'll back off of what I'm saying here. But at least for the short term, to a low doesn't look bad. It's something that's on my watch list. And I think most of these are going to be about the same. I'm still leaning bullish here, even though we saw what we saw on Thursday and Friday. I think where we've come from here in this market, the structure in which it's behaving right now, this is just one of those things that's just part of the market cycle. And it's something I feel that we'll be proud to have, at least a pullback, I don't know if proud of was a good word, but at least be a pullback to get us some better entry prices and a chance to pick up some more money. But maybe I'm wrong about this too. I'll say that as well. Maybe I'm wrong and it's going to turn into something more aggressive. We're going to find out. But I'll have a plan for both of these. Now, this AVGO is sitting down here at this support level right here. This is a pretty good spot for this thing. I mean, you're looking at some of these things that are really at make or break line in the sand territory right here at this 303.64. You had a bunch of clusters all through the month of June where it really held that. And, you know, the thing, though, about this one is it didn't participate too much in the overall market rally. Once we started grinding up through July, this thing, it went up, but it didn't go up that much. And here you are again, closing Friday right down into those levels. This is another one of these good stocks that could be multiply traded in multiple directions. And if you hold this support, chances are it will try to reclaim where it started from and try to move back up to those resistances. There's a trade there. You know, stocks that bounce off of support are not an odd thing. That's something that happens on a regular basis. So there's a great idea there. Also, stocks that lose support sometimes have the tendency to get aggressive and sell off more, cleaning out stops on the way down. And this might be one of those cases. So if the market remains stable early, it kind of regathers itself and starts to move up and starts to act bullish as usual, then, you know, this is probably going to be a long. Starts to get weak and things are selling off, then look for this thing to possibly break this and trade closer down to the 200. I mean, that's pretty far there. So watch this one as well. I'm going to add tier back to the watch list. I talked to this one a couple of weeks ago, but they were entering earnings. So you've got earnings right here that are out of the way now. Not a bad chart here either. You're gonna see a lot of these are gonna look the same. I mean, you could put Apple in this category. You could put a lot of other Netflix in this category. There's tons of other big name stocks that you can put in this category. I'm just mentioning the ones here that I'm currently interested in. But I think if you look through most of the growth stocks, the FANG stocks, you're going to see patterns that are very similar to the ones I just showed you, and they're all going to have the same principle. Here's another strong stock that was in a nice uptrend. The market kind of, you know, pulled it back a little. It's now down into a support level, and everyone that we're looking at a support level is the same theory. You hold the support early in the week, we're going to be looking to buy those stocks. We're going to be looking to trade those stocks to the upside. If the market's weak and it's got to go lower, it's got to move down into those 320 or whatever 311 levels that I was talking about, the lower levels, whatever they were, then these things could possibly be shorts as they break those supports and get aggressive and clean out stops. And then last, I'm going to put some AMD on here, and I'm only going to throw AMD on this one because it had its own thing going on. Somewhere along the line, the world just said, we want AMD, and it just went just silly vert. I mean, look at it. It's just massive, and it's right before earnings. Like, you walk into earnings right here real soon. There's no trade on this for me right now. The only reason I'm bringing this one up here is because we do have this earnings, and I'm going to be interested to see on how this thing handles these earnings and the way the market perceives this. You know, sometimes these get ahead of themselves. Maybe that's the case here. Maybe it's not. I'm talking about short term. I'm talking about a year or 2 years down the road. It means absolutely nothing, I think, in the grand scheme of things. But you saw that with Netflix, a stock that was really bullish going into earnings. They had good earnings, but it just wasn't enough to support where the stock was. It's going through a correction phase right now. That's just the way the stuff rolls. So I kind of think maybe you might see that here. I'm going to pay attention to how it is on the 28th after it gets out of earnings. See if maybe there's some correlation trade with the stock like NVIDIA or other semis in those areas. Or just maybe there's something there after that. But until that point, I'm not interested in it. Anyway, let's see where we end up. It's going to be a really interesting Monday. As always, if you guys need help, remember, you feel free to trade with us at any time. We need to pay attention to those levels early. I think that will set the tone for how the remainder of the week works out. As always, if you need my help, feel free to reach out to me, support at thelincolnlist.com. Thanks for watching this edition of Stock Market Mutterings. Take care. Talk to you guys later.